Dear students, module 48. This is about, I will give you the format for computation of business income. So here you have to remember that every SSC will try to reduce their taxable income. For that, what they will do, they will try to include expenses which are not allowed under this head of income, and they will try to reduce their net profit so that they will think that they can reduce their tax liability. But Income Tax Act will ask we as per the income tax rules, we have to recalculate the income given by the profit and loss account. Then we have to see whether the SSC has taken use of any expenses not allowed under the act, any exempted incomes he has taken charge. All these items we have to include, and we have to recalculate the profit, net profit. So that is the format. And if you just have the basic accounting information, it's very easy to learn this chapter and to do the problems. Very simple. You don't have to by heart any formats or anything like that, but this format will give you the guidelines. So we will start with the net profit given by the profit and loss account. This is the first item we will start. Now you have to add expenses which are claimed by the SSC but not allowed under the Income Tax Act. So all provisions and reserves. Provisions and reserves are appropriation of profit, rent paid to self, all capital expenses except on scientific research. Scientific research is a different treatment that I will explain later. All capital losses, this will go to capital gain. All charities and donations. All expenses related to other heads of income. That is, for example, for house property, dividend collection for income from other sources, anything he has claimed. Then any interest on capital unless the amount is borrowed. All personal expenses like drawings, any depreciation wrongly debited. This is an adjustment you have to remember. In the net profit and loss account, one depreciation amount the SSC will give. In the additional information, you will have the actual eligible depreciation. So this item will always be there for the adjustment. So always you remember, whatever the actual depreciation given in the adjustment, we have to recalculate. And this item we have to add back to the profit. Gains, gifts and presents if it's for non-advertisement, and any fine or penalty, any salary, commission, interest or bonus paid to your partner, any salary or taxes paid outside India if TDS is not done. Then past losses, salary paid to self, personal life insurance premium, any investments in national savings schemes, national savings certificates or public provident fund. These are all investments. Rent for residential portion, that will go to computation of income from house property. Speculation loss, this also we are treating it separately. Then legal expenses for criminal case or personal case of employee. This is not allowed because it's not directly related to business. Loss by theft from residence, it will not come under business. Expenses on illegal business. Though illegal business income we are charging, expenses are not allowed. Bad debts still recoverable. Employer's contribution to unrecognized provident fund. Difference in trial balance, difference due to undercrediting of stock. Cost of patents or technical know-how because it is a capital expenditure. Then preliminary expenses. So all these items we will add, and then we will add to this. So here this is total A. Total A. Now the next thing is total of these items is added to the profit or loss of the as given by the profit and loss account. Now deduct expenditure allowable under the act but not debited to profit and loss account. Now this is less expenses. Some expenses are allowed but they have not included in the profit and loss account. Actual bad debts not debited to profit and loss account. Actual depreciation. See, that is why I told you depreciation is always an item for adjustment. Any other expenditure incurred as per the provisions of law, and difference due to under debiting of stock. This under debiting of stock and all you have to remember, sometimes you will get problems like that. So this total of these items we are calling it as B. B. So here we are reducing this value. Now deduct out of the amount received B. So this is the B total. Deduct out of the amount received B, which is either exempt or not taxable under the head under this act, that is incomes exempted from tax. Exempted incomes. Then examples: post office savings bank interest, agricultural income, gifts from relatives, income tax refund, bad debts recovered, disallowed earlier. Life insurance maturity amount, it's an exempted amount. Any capital receipt, withdrawal from public provident fund. Then incomes taxable under other heads. Other heads, some items are there. So items are part-time salary, it will go to income from other sources. Interest on securities, rent from let out house property, it will go to income from house property. Capital gain, dividend, bank interest, winnings from lottery, racing, computer games, etc. So total of these items is deducted from total B. So these two we are subtracting from total B, and we will get this statement now. Now add income from any other business, legal or illegal, to get taxable income under the head profits and gains of business. Now here you have to remember, add illegal, any other business income, whether it is legal or illegal. Now you will get taxable business income. Taxable business income. So this is the final answer. So here Income Tax Act is not distinguishing between legal and illegal business. So even if you are getting income from illegal business is also taxable. Now you have to remember that with just your basic accounting knowledge, you can do the problems for calculating taxable business income. So you read the items which are listed. These are the common items. Then it will be very easy for computation. This is what I wanted to explain in this module. Happy learning. Thank you.